Hey Bob, what are some of the ramifications I need to be aware of as a property owner in New York with all the new tax codes and tax laws being proposed?
Well, Jason, it seems like just about everything is on the table and is changing every day, and who's for it and who's against it. And are things going to fly? Are they going to be retracted? Are they going to be withdrawn? But the things that keep popping up, at least for a person who owns property in New York, is one, the deduction for your home mortgage interest. That's a big one. That's pretty much a selling point for a lot of people when they are told, look, you're paying $1,000 a month for a mortgage, most of which is interest, maybe $900 of that $1,000 early on could be interest. And your financial advisor, lawyer, mortgage broker, real estate agent is all telling you, yeah, but that's tax deductible. And probably depending on your rate, you could enjoy anywhere from 20, 30, 40% deduction on your taxes for mortgage interest. The other thing that's at play also is real estate taxes. There's the whole talk about state and local taxes no longer being deductible at the federal level, and real estate taxes is one of them. And once again, when you pay your $5,000 or $10,000 real estate tax, at least those are common figures here in New York City, and or 30 or 40,000 out on the island or up in Westchester or in the Hamptons. Once again, your financial professional is telling you, yeah, it may be high, but a lot of it will be tax deductible. If that goes away, that's going to change a lot of people's thinking about home ownership. And there's a bit of a nervous wave going through the real estate market that if some of these deductions go away, that the market will become very quiet. So those are the things you have to be concerned about: mortgage tax, interest, and real estate taxes being deductible any longer. There is, of course, talk that maybe rather than eliminating them, they will be phased in. So if you make 500 or $1 million of income, uh, and you go over that level, maybe then you will lose, or your deduction will be reduced. So the deduction may still be available for people earning, say, under 500 or under a million, but as you go over 500 or a million, those deductions will be phased out. It's changing every day, and really no one knows what's going to happen. We listen to the news reports, and they're constantly changing, just like the stock market. So, for the average homeowner or property investor, just keep an eye on what may be happening to your taxes next year.